What to do when you just can't read market structure. But you need to be watching this series. Within this channel, we go through each week exactly how I mark up my charts to help you to understand market structure. Now, again, this week we're going to go through a pair of your choice, which is the US dollar Swiss franc. There was also gold as a choice, but we've been through gold a few weeks ago, so we decided to do the US dollar Swiss franc. So thank you for sharing that pair for us to go through this week. So we're on the US dollar Swiss franc monthly time frame. Now, there are a couple of ways we can look at this. We can look at the price action, which is close like here in the market right now, or we can look at a bigger picture where we can look at the full movement head to downside. Now, if we look at the price action closer in, when we're looking at a market structure, we can identify that the market has dropped down. Okay, we reversed back to the upside, we swept the high, and then reverse structure back bearish, continue to go lower. Then we're within this current trading range. You see we pull back into that premium area at the high of the area, and we put in a potential reversal candle in the previous month. We do have some imbalances here to the upside, which could actually hold price and continue to push prices higher. Now, if we looked at the US dollar index, like DXY, we are very bullish. And this does suggest we could see that continuation higher. But let's look at this price chart and we'll go through everything. Now this price here, this movement here to me is more internal structure, and we're going to see that more on a weekly price chart. Now if we look at the overall picture here, we can identify a larger movement in the market. So we had here, okay, we had a drop down, a pullback, a drop down, another swing pullback, and then we broke this structure low all the way down to this low. Because this is a previous low, we pulled back, we only swept that low. Now, understanding market sweeps and everything else is inside our liquidity playlist. There will be a link above now for you to check that out. It teaches you about those sweeps in the market. But what happened is the market pulled down to this low, we had that pullback, we've dropped lower, swept this low. Once we see this sweep, we know we'll take this high. That's exactly what happened. So the market at this point is now within a trading range now from this high, okay, to this low. Understanding this trading range is crucial. All of this movement now within here is just sideways price action. It's internal price action. And again, if you need to learn more on the internal and swing structure, you can check all that out inside the playlist, which is the market structure playlist inside this channel. And of course, if you want to learn more on how I mark up my actual supply and demand zones, then you want to check out that profit trade workshop that will help you to understand supply and demand. So back to this area here, we now have this as our trading range from this low, and from this swing high would be the high of our range. So we can then look to mark up that range as well. Where do we fall within that range? We'll come back inside our premium area, inside the 50%, above that 50%, should I say. We could go deeper yet. We could go higher inside this range. There's no reason we couldn't see this push deeper into this range, into this area here of supply to then drop lower. So consider that if we go closer into this area of price, we had this internal drop down, pullback continuation. So we do have this area here of supply. In fact, the full zone would be here in the market. And we just failed, okay, to come back into that zone. So what we've left here as well is some liquidity at these highs, which the market may want to run at some point. So consider that we could see a continuation move higher yet from this area. But internally, okay, the market has come back into a premium. Okay, but we haven't really gone into an area of supply yet, but we are going sideways. Internally, we can see the structure is bearish. Now we're going to see this much better if we go over to a weekly time frame, but let's just first mark up these structures. So our structure break is here. We're on a monthly level. This is then going to be our high of the range. Okay, and this is going to be our low of the trading range that we're currently in. Now this is our 50% level within that range. We don't need that now. This is the true area of supply, in fact, of this move. This move here is our true supply because this is internal supply. Now you can see price has come back to the true origin area. Now the supply is this full move up. We can reduce that to the last bullish candle. But you need to understand this is the full buy to sell move where we eventually broke out here. Now, this is the internal supply that broke the structure to the downside. So you can see price has come within this area. Okay, shifted back out and we started to go lower. So we could see the continuation for this low. Let's now go to a weekly time frame and see if this agrees with this price action. So on a weekly time frame, we can identify, okay, all this price action within this move. So if we now just go in, we don't need to worry so much about this price action back here. So we will look at price on the weekly from this area. Okay, so all we need to look at is the closest price action. All we need is those 3 levels we've just marked. Okay, remember, that's all you need to do is 3 levels. Do not clutter your charts. It's the worst thing you could do. Now, we do also have in this channel, if you're not sure about imbalances, I don't talk about them too much in this video, but we'll look at some imbalances today. But the idea of the imbalance, if you want to learn more on exactly how to use it, trade with it, okay, and apply it in your trading, there's a full playlist in this channel as well. If you want to check that out, I'll leave a link above, okay, now for you to check out the imbalance playlist as well. So let's just go through now how we mark this up. So our last sweep was this high. So what we've seen here in the market, okay, is just a sweep, and we'll change this to a dashed line. So we've just pushed up, swept that high. Now, once we see the sweep, remember I said about the playlist, liquidity playlist, we expect the market to want to run the last low. So this low would be expected to see that run. Now, it's not a true break, but it's the area I expect to see the market to run. Now, the true break is this move here where we have a break of structure. So we had a break of structure. Let me just double check this. Break to downside, pull, break to the upside, a small quick breakout, break lower, pull back. Then we need to see a break of this high. That is correct then. So we broke the upside here. This suggests we had to break this low, which we do just there. And then the market continues to break lower. Okay. Then we have here let's go close in, see if that was a break or a sweep. Very close to a sweep. We did just break out. It is a true breakout, but then the market continued to go lower. Now, we could have seen this more as a sweep based on this 2 candle where we swept the high. Okay, understanding we're coming back into this area of supply. But okay, it is a true break as we did close the level. So now the market has gone down. That means we'd have to break this high. That puts us in a bearish bias at the moment on this weekly time frame. Now, understanding that we now broken structure once again, this becomes my strong high, my weak low in the market. That is my current trading range. Now, on the way back up on these ranges, you can notice these red candles, okay, and these blue candles. They are my previous areas of imbalance. All I need to know is where they are sitting. And we can identify the market starts to run through these levels of imbalances, okay, and continues to go higher. So based on the use of imbalances, I was expecting to see this high get run. And this could still happen yet. Okay, we could still see a bullish move up here and breaking this structure and going back bullish here on the weekly. So what we need to consider for this is to look at the lower time frames. So the weekly and the monthly at the moment, I would consider to be bearish. Now, this is going against what we're potentially seeing on the US dollar index. We'd expect to see the US dollar index and the US dollar Swiss franc within that same directional bias, being the US dollar currency is strong at the moment. Now, we look at the Euro USD, we'll be able to see that is also on a potential bearish bias. We would not normally see this with the US dollar Swiss franc. We would normally see the complete opposite to the Euro USD. So this is not looking as slightly conflicting price action at the moment compared to what I'm seeing on those other pairs. So let's go to the daily time frame. We have the daily. Okay, we can see that the daily's been in a bullish trend. You don't need to put in the price levels to see this. We can see we've been bearish, okay, here, and then we've gone bullish on the way back up. So let's now go through and mark up our areas. We can identify that we had our last break of structure was here, which reversed price. Okay, it's important to know where we see that reversal coming from. The market then created another continuation, break of structure bullish. Then we had this level broke out as well. Okay, now we're bullish. Now we start need to read these price actions. So we have a high, a pullback. Do we have a breakout there? Yes, we do. So that's another bullish break. Now I'll show you as well. We have another breakout, but also show you there was a potential sweep here in the market. right there was a sweep. Okay, so we swept this low and then we continue to run the high. That's understanding that sweep. We then had another break of structure here to the upside. So now we have this swing low, okay, push down below this swing low again. What we then have is another sweep in the market. Okay, so understanding where these are happening is really good for looking for good trades. Now that means during the day, there's probably a news event that's pushed the price down, swept that low, then we continue to run up. Now we're getting into this high area, okay, the premium area. So at this point, we've then got a breakout, pullback, continuation. This level now becomes, okay, my actual strong low. Okay, this is where I don't want to see price pushing through. Now we've pushed through, we swept this low once, pushed up, we swept low again. We then broke structure internally, because what we've now got, we've got this as a trading range high on our daily. And this is our trading range low on the daily. So I will mark it off as an actual structure. So we're currently bullish on the daily until, okay, we close through this level. If we close through this level, then we have a bearish bias on the daily. That means we're potentially looking for the continuation all the way down till we run this low here. So this is understanding the structure, okay, on the daily at the moment. The key thing to look at right now, if you're going to be trading this pair, is to watch this level. See if we actually break and close through and we reverse structure here. Or if we just look at that sweep and we continue to go higher. Now, when we're looking at these sweeps here, I would prefer to see this run up, pull back, hold an area here of demand to continue up. Now, on the lower time frames, we may well see this. On this daily time frame internally, we have pulled back inside this area on this wick. This wick will act as an area of demand, and this could now potentially hold price, and we could push higher for this high here. That would mean we would be seeing a bullish bias on the US dollar Swiss franc, but we need to see a bullish bias at the same time moving up on a US dollar index, and we expect the Euro USD to be falling when we see this price action. So to go down now to a 4-hour time frame is going to give us an indication of structure where we're going to reverse head to run for this high. So we go down to a 4-hour time frame. And just quickly before I do actually go down to the 4-hour, we do have this big imbalance candlestick. Now very often what we can see is a bounce inside this area of imbalance and then a final push lower. So this is something to watch out for. If we do look for any trades here, be very cautious once we enter this zone. Make sure you have taken risk off your trade and protecting your account. If we go down to a 4-hour time frame, let's look at the structures, what's happened here. And the 4-hour gives a different picture. Where we see that sweep, okay, on the daily, it is actually a break to the downside on the 4-hour. So if we was looking at the 4-hour structure, let's say we had the 4-hour structure, in fact, is going to be the same point. So this would have been a 4-hour, okay, level here as well, but it would have been a break of structure. So if we was to look at price, let me just look at this low, because this big wick here, to break this high on 4-hour, this would have been, let me check, okay, the 4-hour has broken structure. Here we broke up, small breakout, went bearish, went bullish, swept a high, pull back, we held at this low, we broke out bullish, we pulled back to this level, we swept the high, never broke out, we swept the low here on this big wick to downside, which indicate we run for this high, which we did. We failed to break out, then we've broken out. So this is a true 4-hour level. We've broken back down. So right now we see the 4-hour is currently bearish. So this is how we look at reading price. Okay, now the 4-hour structure, we're looking at the 50% area is right here. So we are above in premium. So this was a area we could look for a sell out of, understanding our structures. Now we can look at internal structure here and we can look where price shifts. Okay, so we do push up, make this high, we don't go any lower. So in really true form, this is actually a break of structure internally. Now lower time frame was potentially would have found an entry earlier, and that would be looking at this internal structure here to downside, pull back into an area of premium once again on the lower time frames. That we can even see this on this time frame, pull up into this area of imbalance, potential sell to downside. So at the moment, what were we expecting to see? Okay, so if I just pull this level down here, we'll be looking for price to run to this low. Now we can either see the market from this point, okay, sweeping this low, wanting to run back to this high. Okay, so the market, remember, the structure is we went bullish, went bearish, we pulled back, okay, lower high. We want to see the market now run this low. Now, when we do run this low, yes, this is going to place this as our strong high within the trading range, our new low. We're expecting to see another pullback continuation. Now, if we see it close down through this level and a close down on that daily at the same time, it's going to shift the structure on the daily. This is going to be a better setup because then we're going to start seeing bearish price action on the 4-hour time frame and the daily time frame at the same time. I would not be looking to take any trades right now. I personally will be waiting to see if the market's going to push down to run this low here in the market. Then I'll be looking to see if we actually just sweep through this low, okay? And then we see the market run back high to run this high to reverse structure once again in line with the daily. Now a sweep here would indicate we could run up for that high, especially if we're going with that daily time frame. Now I did say on the daily we were looking at potential area on the wick, which is down here. We're looking at an area of demand that potentially price is holding at on the daily. Now that could still happen. But what I really like to see, if we look at the imbalances, and again, remember I said about that playlist, okay, so we are holding at the last imbalance. So even on this 4-hour time frame, okay, we are holding this area on that wick on the daily, and we're holding at this area of imbalance on the 4-hour. So we could see a bounce from here to push higher. If they are to hold, personally, I'd rather see the market sweep this low, then give me a buy. A much better setup to see that the markets run the liquidity at this low, and then we see the move higher. Now, of course, like I said, if you want to learn more on how I'm marking up those supply and demand zones, that Profit Trade Workshop is an awesome educational series for you to go through, plus with my support inside that supportive community. Now, there'll be a link popping up for that right now. And of course, make sure you watch the next video in this series. If there isn't, then check out one of those playlists that I suggested going through this video.